There's some absolutely fascinating things going on inside the crypto market as well as the stock market. We'll talk about soft landings. Are we heading for one? Or a hard landing? Is that incoming? It's vitally important to be on top of what is happening right now. Let's run the numbers. Welcome back, everybody, to the Daily Show. I'm Ken, and I focus on helping you to be more of a financial and emotional blessing to yourself and those you love. It's vitally important that you learn how to trade. Over the coming years, the markets are going to get extremely choppy. You need to take advantage of those chops and changes that occur just on a regular basis. And it's also useful to understand all investors become traders anytime they buy or sell. So traders do that buying and selling very, very effectively. You can too. You can have two superpowers. I'll just give you a really quick illustration. This is the VIX, or the fear gauge of the main market, and the blue line there in the background, that's Bitcoin. When I invert that scale, do you see anything interesting? Do you see when the VIX was coming down, Bitcoin was going up? I'll uninvert it. There you go. Look how it overlays. It's almost a perfect match. Traders know things like this. They specialize in timing. I'd like to share something really important to me with you. After being inside financial markets for nearly 4 decades, one of the things that I've seen is there's really no bull market and there's no bear market. What typically happens is pretty simple. Price is just going up and down and up and down. It has an uptrend or it has a downtrend or it's consolidating. But the key idea is if you can buy on red at structural understanding levels, you can do incredibly well, no matter if it's a bull market or a bear market or any kind of market. And having financial literacy is really, really important in this day and age. AI and robotics is coming for your job. You need to develop financial literacy, or else you're going to be in a world of hurt. The stock market is just hanging on the edge of a razor blade. If we go into a hard landing, we could anticipate really sizable withdrawals or drawdowns. But if we go into economic recovery, we would anticipate doing really, really well. If we do get an economic slowdown, that means that the Fed will have to decrease interest rates rather aggressively, and we would anticipate that the 2-year and the 10-year yields will come down. Sometimes after the Fed eases interest rates, we see the 10-year go up and therefore uninvert the 2-year. In a sense, this is pretty normal because we're getting a normalized yield curve under those circumstances. When we compare the S&P 500 1-year performance following the first in a series of rate cuts, you can see September 1984, the S&P 500 did pretty damn well. What about June of 1989? Well, it was pretty choppy. It was all over the place. So this was a perfect trader's market, but it also did relatively well. What about in July of 1995? Well, it speaks for itself. It did extremely well. September of 1998, that did very well. We saw after the dot-com bust and the GFC in 2007, we had quite a retracement in the S&P 500. But if you knew how to trade, you could have done incredibly well. Going long at spot, not even shorting. If you know how to trade, markets like this hold immeasurable opportunities. And in COVID, when that hit, we had a really big reduction in the markets. And of course, crypto got hit wildly. But if you were fortunate enough to buy at or around that bottom, in not only the stock market, but also the crypto market, you would have done incredibly well. Unfortunately, typically what happens, investors are drawn into markets like this and just dumped all over by the institutions. These kind of up and down markets, you can incredibly increase your portfolio, but of course you need to know what you're doing. This one is probably a little bit easier to understand, but it's something that if you buy on red, you can do incredibly well. If you look at any retracement, you'll often see it does retrace at least 50%. This means profit is made where you buy. The Profiting from CTKS Method Structure course is coming out on the 9th of October 2024. You can get it for absolutely nothing, but you'll need to do a couple of things. You'll need to be either in the Masterclass, have done Level 1 and Level 2 Standard Certification through ctksmethod.org, or be a current member of the CTKS Method service. All you need to do is to fill in the form in the URL of this video description. That's it. It's very important to understand the intercorrelation and interconnection between the stock market and also the crypto market. A lot of people inside the crypto market don't understand why you should look at Bitcoin. Many people say, oh, I can't afford Bitcoin. It's so damn expensive. $63,700. I can't buy 10 billion of those. I have to pick something with a really, really low price. There's a bit of a secret inside the crypto market. Bitcoin absolutely and utterly controls the fate of the alts. That means if Bitcoin is coming down, the alts are coming down. But if Bitcoin is rallying, the alts will rally. But of course, far more than Bitcoin. And you can see on this particular chart, the S&P 500, which is the white line. You can see how Bitcoin and the S&P 500 are moving pretty much in lockstep. As the S&P 500 futures improved, what did Bitcoin do? It improved. What about the NASDAQ futures? Well, yeah, they are predicting the future of Bitcoin at the moment. What about the Dow? How is that moving out? Yeah, it's doing the same thing. And we can actually see that the S&P 500, the NASDAQ futures, and the Dow are currently just breaking out. The Russell 2000 is a little bit under pressure. Oh, it's not happy. But if we get a soft landing, the Russell 2000 and gold will do really quite well. The intercorrelation and interconnection between charts is utterly undeniable. If you don't know how to look at charts and you can't interpret them, it means you can consistently get put on the wrong side of the trade. And basically that means, unfortunately, you will lose a lot of money. If you managed to watch yesterday's video on the price targets for the end of the month on gold, the S&P 500, Bitcoin, and a range of other things such as silver and copper, Microsoft, and Tesla, what you would have noticed is the S&P 500 has come into a very substantial level of structural overhead resistance. It's likely to flatten out for a while, and we can see a bit of flattening out in the current time for Bitcoin. Hopefully this will translate what we've just seen into a break up and a re-challenging of this overhead structural resistance around that $65,000 mark. But you must always have your three-dimensional thinking in mind. A lot of people, when they get in, they just try to fully invest. This is a dangerous play. Many people say, Ken, why would it be dangerous? The fund managers tell us to do it. The companies that are represented by the fund managers, they also tell us to put all their money into their stock. Hang on a second, that doesn't really make a lot of sense, does it? I mean, if you really think about it, you need to guard your own financial future. A lot of people are attracted to the market, especially when it goes green, especially at times like this, only to see the market reverse on them, and then they generally sell, throw up their arms, and just say, I'm done with this stuff. Actually, you need to flip your logic around. You need to get really excited as price comes down, and a little bit more cautious as price goes up. That can be really difficult to do, and you need to know what you're doing, but when you get the hang of it, you'll find it is really, really helpful. Therefore, what if we don't break out? What if we don't get up to the 65,000? Where's the next approximate level? Retail would be looking at around that 60,600 mark. And that could definitely be on the cards because we know that the S&P 500 has got a lot of overhead structural resistance. It could play down, gather strength, just pull all the shorts into the market. Same thing with Bitcoin, pulling all the shorts in, coming down like this and then just whacking them all out of existence. We've just seen the markets move up pretty substantially, but there's only been $89 million worth of liquidations. This is like a Saturday and Sunday liquidation level. What does this mean? A lot of players are sitting on the sidelines to determine what is actually going on, and the longs and the shorts are fairly equally matched at the current time. The markets have been very, very turbulent just of late. I always think that it's a really good idea to stay in the markets no matter what. You can significantly reduce your position size because being in the market and having skin in the game is really important. Look at what we're seeing with Bitcoin. Bitcoin just rallied up and is now starting to come down. What is Ethereum doing? It went up and starting to revert, just like Bitcoin. You notice this is quite intriguing. Binance Coin has come down hard, and it's really come down hard. It's just literally looked at Bitcoin's price action and said, yeah, I'll go up a bit, but I'm a bit weak at the current time. Solana powerhousing it around. XRP doing really well. Dogecoin also doing well, ADA doing well, and total crypto market cap following Bitcoin's gravity. What has caused this sudden spike in Bitcoin? It's a decay in the VIX. And if the VIX decays, we anticipate that Bitcoin and also the major market indices will be coming up. What has the VIX just done? It's just starting to dogleg back up again. That's placing negative momentum on the major indices. Gold was doing well and said, I'm out of here. And what about the dollar? It's decaying. This is a very good sign for a lot of different reasons. When the dollar is going down, it means that people are putting their money elsewhere. At the current time, it looks like they're putting their money into bonds. Or alternately, the stock market. Or, of course, crypto. But not so much into gold at the current time. We can see oil doing pretty damn well. With Bitcoin's pump, we saw WIF and ENA just go nuts. But the lower bank is currently TIA, Aave, and True. One thing to just bear in mind, as Bitcoin comes down, it will drag pretty much the entire crypto market with it. We're looking at a 5-minute chart, so it might be a little hard to see that, but when we zoom out, it's unequivocal. Here, we've zoomed out to around the end of August, and we can see that Bitcoin, which is that white line, is just controlling the fate of the entire crypto market. We do have upper bank plays, such as Teo and Sui, and also FET and Phantom, Aave, IMX, all doing really well. Not is having a bit of a headache at the current time. Inside the crypto market, it's always good to understand how the different ecosystems play out. Looking at the Ethereum ecosystem, Jasmy is doing quite well. What about in RWA, real world assets, ICP and Dusk? Gala and Ape are rocking it in the gaming sector, and WIF, Arweave, C98 and JUP are just jumping for joy in the Solana ecosystem. Inside the service, Solana is doing the best, followed by ADA. AI and Big Data, Arkham, followed by FET. What about the memes? It's WIF and BOEM. Distributed storage and distributed computing and file storage, ICP and Arweave. A little while ago, it was really interesting to see SafePal in the wallet segment just go absolutely nuts because there was a hack. And what do we see? SafePal is down again. But look at centralized exchanges. KuCoin is having a definite problem. KuCoin is currently down 23%. In DPIN, we can see ICP and Rwave, also see a coin, doing really well. In the Bitcoin ecosystem, ICP again. My goodness, ICP is everywhere. And what about the layer 2? Metis and SKL not doing too badly at all. Inside decentralized exchanges, Dodo is alive and well and kicking. Excuse my humor, Dodo is basically a bird that doesn't like to hang around. ENA in Binance Labs is doing pretty well, and it's also doing well in DeFi, as is ICP. This ICP is showing up everywhere. One thing to realize about charts, smart money always profits first. This means that if you look at the actual price history of something and you see something going on like this, say with KuCoin, that means, yeah, you may find something in the news, but you already know that KuCoin is coming down. There must be a reason. Just like SafePal was coming up several days ago, there must have been a hack. And typically, when centralized exchanges get thrown under pressure, DEXs and wallets tend to go up. When you look at the charts, you can tell a lot. Look at this cutover in China. China is currently going for it. Russia is going for it as well. As China is the world's largest factory, well, this is good news. This means that the economic system is potentially turning around, and that's probably feeding into a bit of a frenzy inside the main markets. And when we look at Taiwan's market is crossing over at the current time. So things are looking pretty good across the board. But don't forget, price is always moving in a wave. It's always moving up and down, up and down. It's just the nature of price. It's fantastic that I can show you in real time what is happening here. Remember how Bitcoin was just going for it and the major indices were going for it as well. Notice that pullback in the S&P 500 and Bitcoin, in the NASDAQ futures and Bitcoin, in the Dow futures and Bitcoin, in the Russell 2000, you got it, and Bitcoin. If you understand intercorrelation and interconnection, which is a thing that we specialize in the CTKS method, you're going to understand things at a professional level. There's going to be a wide range of new indicators only available from profiting from the CTKS method structure, which is that new course that's coming out soon. So please keep your eyes on that. This will only be available from there. When looking at total crypto market cap, we can see that we have structural support through around that $2.175 trillion mark. This is a really important structural level for crypto to hold. If we find it goes like this and makes its way up to this overhead resistance, that's fantastic news. But if we see an underside retest and a resumption down, that's not so good. At least you know which level is actually significant. And when you overlay your charts on total crypto market cap, you'll see where they align. I'll be talking about that a lot more in the course Profiting from CTKS Method Structure. Without a knowledge of structure, it's incredibly difficult to understand why things can go up and why they can retrace. That's why, with the method, we understand where structural resistance levels are, how many they are, how strong they are. We saw a positive fresh air gap here, which translates into a fair value gap under other methods. But when we see this structure, and we know where these fair value gaps are before they occur, and that's the most powerful thing. We came up through structural resistance at 63,700. structural resistance at 63,800 as well, and 63,900. We just couldn't confirm it as support, and this is incredibly weak price action. It is possible that we may revisit around this 63,350 mark. If we don't hold on to this, that actually opens up the 62,865 level. And you can see if we can't get above and we can't just consolidate, we're going to the level below. But if we start to confirm as structural support, we're going to the level above. It is literally this simple. And inside the course, profiting from CTKS method structure, what I'll do is I'll take you through a trade that was done as this particular price action occurred. In terms of Bitcoin, it's really important to keep your eye on what happens to the 63,700 mark. If we get above there and confirm it as support, we have some resistance levels above that we need to confirm into support. And if we do so, there's a really nice positive fresh air gap, literally up to 64,400. So price could just bolt from there on up. And if you're inside the service, you see all of the levels above and below under a normalized price condition. When looking at Ethereum, we can see that we broke out of this structural resistance level just north of 2581. We filled a positive fresh air gap and got just hit on the head at 2670. We tried to get above it, couldn't confirm it as structural support, and then failed. This is pretty interesting. We're making lower lows here. We absolutely require to take out that 2670 mark. And if the major indices keep on doing what they're doing, we would anticipate that occurring. At the start of the video, I was explaining that BNB was coming down. BNB, like every single chart, is governed by structure. When you understand this important fact, everything becomes much easier to cope with. You can see literally at that 603.2, we have a level of structure. We've also got one down a little bit. Please be aware that retail traders and investors use whole numbers such as 600, 650, 700. Please don't use whole numbers. It is a very bad way to look at a market. That is a retail level. You want to stay as far away from retail as you possibly can. It's like just aligning yourself with the worst student in any class and saying, please tutor me. The main markets at the current time are throwing a very interesting signal for Bitcoin and of course the entire crypto market cap. So please keep an eye on what the major indices are doing. Make sure that you understand what the structural levels are of support and resistance. Well done to everybody yesterday who got targets as the secret word. You're absolutely, utterly awesome. And thank you so much for sharing this time together with Kate and myself. Look at whiff. It's got a whiff that the markets are going up and it's having a gala of a time. Fantastic. The secret word today is actually two words. It's directional correlation. Maybe try to just squeeze that into a sentence of some sort inside the comments. I love doing this stuff with you. It's just so much fun. Thank you again for being here, and Kate and I look forward to catching up with you again in the next video. Bye for now.